So we're rolling now. We don't really have a way that we introduce this thing. We just start casual when we say, here's an Agile thing. I'm Matt Beam.
I'm Mike Markey.
I'm Jeff Singleton.
And today we have with us the Throughput guy, Graham Scott, all the way from New Zealand. Thank you for joining, Graham. Appreciate it.
It's a pleasure to be here, Matt. Thanks for the invitation.
Excellent. So just for the audience's benefit, we were trying to find somebody who's an expert in throughput accounting to talk about it for a while. And in the spirit of how to help companies understand how to do prioritization and what to do and what order and how to make that make sense in a way that's data-driven. And so we invited Graham here to be here today. Graham, before we start, we have a list of questions, but I'm wondering if you might just want to give just a brief background of how you got to be a throughput accounting expert.
Yeah, Matt, I had my own accounting practice, chartered accounting, CPA type practice in New Zealand, and was always interested in much more in the business side of things than the actual doing the numbers. And I went along to a seminar run by a couple of local theory of constraints experts, and the stuff they said just made so much sense. So I got them in and they helped me put what's known as drum buffer rope into my accounting practice. And it just made the thing go crazy. The throughput, the flow of work was just so much faster. And one of the things I'd always said to my clients is if you've got a real business, you should be able to walk away from it and it runs itself. If you have to be there, if you can't take a vacation, then it's just a job. So I decided to put my money where my mouth is and took my 2 young boys and wife, and we went traveling for 9 months and left this 12-person accounting practice to run itself. While I was away, sales went up, and when I got back, I didn't really have a job. So I thought I'd better learn a little bit more about theory of constraints. So did a lot of courses. I think they're branding them now as Black Belt in Thinking. So I taught that course for quite a few years. I sold the accounting practice nearly 3 years ago, and I've just been out consulting. So
Nice.
Wrote a book, and just, as I say, the logic, the common sense of this whole theory of constraints just resonated with me, and wanted to find out more about it and how we can apply it more to the accounting side of things.
Fascinating. Yeah, the drum buffer rope concept I'm familiar with from Steve Tendon's work, the tame flow.
Yeah, I was talking to Steve earlier in the week.
Oh, that's fantastic.
I've met him through LinkedIn as well, and we have catch-ups every now and again. He's got some exciting stuff coming through, and he's wanting me to help him with the accounting side of it at the next stage.
Yeah, I've heard of it. It's something about tame flow for scale. It's sort of taking on SAFe or something. I haven't seen much about it yet, but
yeah, no, I've had a sneak preview, but it'd be worth looking in on. He's a very, very smart guy, Steve.
Yeah, something just showed up, and I saw it in LinkedIn about an hour ago. It was a thing from him that basically said, "Safe, you killed Scrum, prepare to die."
I did see that.
That's a reference to the
or you
Princess
killed
Bride,
Agile. Killed Agile, but yeah,
you killed Agile.
Yeah.
Okay, so we've got a list of questions. I guess we could just start marching down the list of questions, unless anybody has any better ideas about how to approach this topic.
Sounds good.
Sounds
Hearing
good.
none, so ordered. Can you give us a brief overview of what it is? What is throughput accounting, and how is it different from traditional accounting methods?
Okay, so traditional financial accounting it's all about reporting, and it's reporting to shareholders, and it's reporting after the event. You're looking in the rear view mirror. From that, management accounting and cost accounting was developed, and the idea of that was to help make management decisions. Very, very cost focused. And originally, when it came out back in sort of Henry Ford's day, all Henry's workers were paid piecemeal rates. So if they stopped, if the production line stopped, they didn't get paid. So everything was a variable cost. Whereas nowadays we have unions and people on salaries and things like that. But there's still this real need that people have to know, how much does it cost to produce that widget, or how much did we spend on that project or that bit of software? And then you start thinking, well, that developer sat in that bit of real estate and that 10 meters, so we need to charge him that bit of rent. So now that everyone's working from home, I'm not quite sure how that all works.
Yeah, that's kind of blown up, hasn't
But
it?
it's this idea of trying to figure out what everything costs. Throughput accounting is much more about what's the rate that we're making money, how fast are we making money. And the whole theory of constraints, in a nutshell, is that every business has a constraint. It has a bottleneck, it has a rate limiting step, it has this one thing that stops it just putting out infinite output. So throughput accounting says, well, if you've got this one bottleneck, this one place that's limiting your output, why don't we measure the speed of money through that place and
I
use
see.
that as a measure to make our short-term decisions?
So the idea
And
is, if you can, every system has a constraint, right?
yeah,
It's not that you're going to get rid of the constraint. It's that you need to understand where it is and manage it, and then see.
manage the constraint.
Yeah, yeah. Because you might, if you haven't done that, that's highly likely that by managing the constraint, alleviating it, exploiting it, I think is the word that Goldratt
Yeah.
used, which I think is a little bit confusing, to me at least. But if you haven't yet managed it and exploited it, you probably have a lot of potential improvements you can make just by doing that.
Okay.
Very much so.
Okay, so it sounds like the rate of production of value is limited by that constraint. So it doesn't make any sense to try and improve any other part of the business other than the constraint itself, because that's the only way you'll change the speed of value delivery. And then, but
Absolutely.
so that does imply though that if you do manage that one constraint and you manage to make it faster, you might uncover a different constraint and you have to move your attention elsewhere.
Definitely, and this is where the ongoing improvement comes from. The analogy that I use is, if you've got a car and you want the car to go faster, it's likely that the engine is going to be the first constraint. So it's no good putting a new sound system in there and expecting it to go faster. Once you've got a bigger engine, you might find that it's actually the fuel system that's constraining you, or the tires, or even the brakes that are stopping you going even faster. So as you fix one constraint, you sometimes find that that you need to move to another, or you might just decide that it makes sense for our developers to be the constraint. So let's have them as the strategic constraint and build everything around it so they are always the constraint.
Yeah, that's the thing that we sometimes see in companies is they will do. I think it's called optimizing. What is the term for working on something that is not the bottleneck? It has no effect, like you said. You can if your engine is the thing that's holding you back, tires actually you could spend a lot of money on tires, but it makes no difference to the speed of the system, which is what you care about.
Absolutely. Yeah.
Yeah. So not knowing this dynamic can really lead you down some rabbit holes that cost you time and money and attention, but don't increase this throughput of value or help anybody. Yeah.
And so the focus, I suppose, and I'm in danger of moving on to your next question
Totally fine. I'll take that
about
risk.
the fundamental principles of
Yes.
throughput accounting.
Yes.
When a theory of constraints person talks about throughput, it's a word that we're talking about the money throughput, and more specifically the margin. So in normal accounting terms, you might talk about margin as being gross profit or your sales less your variable costs. One of the differences is that we only look at those variable costs that vary one-to-one with sales. So if you're in a retail situation, it's just the cost of the goods that you buy in and the freight. We're not trying to, and if you're making widgets in a factory, it's just the raw materials. We don't use things like direct labor. So that's one of the major differences. And if it's not one of those things that varies exactly with sales, then it's seen as an operating expense. So in the software world, if you're writing a particular bit of software for a customer, it's likely that your only totally variable costs might be some licenses for some software. Perhaps, if you're doing a VR project, you might have some headsets you need to buy. But almost everything else is going to be a fixed cost and will become part of your operating expenses. So that means when we're comparing two different products to see which one should take priority, we're just looking at the sale price less any costs like your licenses or something like that.
Okay.
And then the other part of the equation, throughput accounting is very big on return on investment. So we have these three things: throughput, less our operating expenses, basically gives us our profit, divided by the investment. So our operating expenses, that's the cost of turning inputs into outputs, and the investment is anything that we need in the way of desks, chairs, computers, raw materials, inventory, to cause that to happen as well. So whenever we're making a decision, it's very rare that you can increase sales without some sort of marketing cost or buying some more equipment. So it's always looking at what's our return on that investment? Is it worthwhile? How does this investment compare with that investment as to the
How is
return?
this? This must be related to cost of goods sold? I'm not sure technically what the definition of that is, but is there a relationship there to cost of goods sold?
Yeah, cost of goods sold is a totally variable cost. If you're in a retail world, then it's what you've paid your suppliers for the goods that you've sold.
Okay.
And then under cost accounting, what people will try and do is take things from below the gross profit line, those expenses, and put them above the gross profit line. So suddenly the staff who are in the warehouse become a direct labor cost. And then you've got to try and figure out how much time they spent moving, these goods compared with those goods. And it just gets incredibly complicated. The
So, so Graham, you launched there into kind of one of the questions that was in the back of my mind. So, in very simple terms, then what you're saying is, for throughput accounting, labor costs, you're not allocating costs; those are all just going to be lumped into operating expense. Is that's what you're saying?
they're an operating expense, yes. Yeah.
Okay.
So
So I think
that
go ahead.
sorry, I was going to say that keeps it nice and simple.
That's funny. I was about to say I can start to see why product owners maybe haven't started to use throughput accounting yet. It's complicated. It sounds a little bit more. So there's some sophisticated financial stuff, calculations that product owners would need to do if they really actually own the product. And and this is why we wanted to get into this. But I don't. Maybe we should continue with the list of questions, but at some point, I want to sort of get into how you would help a person on an agile team who's responsible for defining work and prioritizing it, and
Mm.
giving a rationale for the order of stuff, how they might use throughput accounting to maximize the value of the stuff.
Yeah, no, definitely happy to talk about that. I think just a couple of other things. Because throughput accounting comes from the theory of constraints, one of the assumptions that many people in business have is looking at the whole system is often too difficult.
Mm-hmm.
It's too hard.
Yeah.
So our default is we assume that if each part of the system is efficient, then the whole system must be efficient. And that is a really, really bad assumption. That
Yeah.
leads to huge amounts of work in progress, which clogs up the system, which stops the flow. So when you start chasing efficiency across every part of your organization, it actually slows the whole system down. And that's why it's so important to have your constraint relatively maximized and to have spare capacity around it to absorb the variation.
Yeah, the spare capacity is the part that I find people struggle with. It's really and I took the term mental models from Steve's book, and we've sort of beaten that up here because I think it's really, really fundamental. But
Mm.
it's like the part that people tend to choke on is the idea that we're going to pay people to stand around and not do anything. Right? That's really, I guess it's probably unjustifiable from a cost accounting perspective. Like, you're paying for something and you're not getting anything. So from that point of view, it makes sense. Everybody should be busy all the time,
Yeah.
but it actually doesn't lead to more stuff that you want when you look at it from the overall system perspective. That's really the key, right?
Yeah. And I
Yeah.
think if, 40, 50 years ago, when we didn't have all these ways of measuring productivity, then having everyone busy was better than having nobody busy.
Yeah.
But we've moved on from that. And one of the little examples I use in my book is our local hospital. One of the board of directors was wandering around and he saw two porters um, standing around having a chat. So he said that we've obviously got too many porters, so they fired some.
Yeah.
Well, a couple of weeks later, there's an operating theatre standing by with all these surgeons and nurses and anaesthetists and experts costing who knows what per hour, and there's no one to bring the patient to them.
They didn't see that at the time they made that decision.
Exactly.
Yeah.
So the most efficient thing they can do is the operating theatres for them, that's the bottleneck. There's only a certain number of people they can get through them in a day.
Yeah.
And if they lose an hour of operating time, it's gone forever.
Yeah.
And to have someone on minimum wage standing around doing nothing to keep that operating theatre turning over makes absolute sense. And that's the bit that people need to get their heads around.
Yeah, I've heard it said that people can wait for work, but work should never wait for people. That's another way to say it. Would that be
Yeah,
correct?
yeah. And
Yeah.
I've seen in a high performing team, you've got people waiting for work,
Yeah.
not
This,
work waiting for people.
this is what peak performance looks like. You might not like it,
Yeah,
but that's what it is.
But
yeah,
we're inured to it's imbued in us almost that utilization. We don't want low utilization, and I get it. There are times that you have to have accept a lower utilization in order to help flow, but there's got to be some cutoff because if, to use the porter's example, if now, I mean, they didn't get rid of all their porters
no,
now, but if you cut to the bone, then, when you're cutting flesh, you're not cutting fat. You're actually cutting flesh and you're cutting your ability to produce. And so I've vilified this hyper focus on utilization in the past, but I think it's not necessarily a bad thing. It's just let's not overuse this whole utilization percentage. Would you say that?
It,
What would you say about
yeah, I
that?
think the utilization, again, the assumption is that if our utilization levels are high, then we must be getting work out the door and therefore we're profitable. But it can work against you as well. Part of in an accounting practice, a traditional one, a little bit like lawyers, you work in 6-minute units. You have to account for 10 units every hour, and it gets charged to someone. And if you're not, 80% productive for the week, you get a rap over the knuckles. The issue is that causes the wrong sort of behavior. So you start a set of accounts, something's missing, you email the client, you put it down, you start another set of accounts, and there's something missing, you put it down, email the client. The guy I sold my business to, when he came to work for me, he left behind 21 part completed sets of accounts. So that's a whole lot of work that he's been paid for, but no one can bill. And
But it makes
so,
total sense because that's what the incentives will. I mean, incentives are so powerful, right?
yeah, there's a wonderful Gold Rat quote. He says, "Tell me how you're measured, and I'll tell you how you behave."
Ooh.
Totally.
So in my practice, we stopped measuring productivity, and we started measuring our work in progress. We kept that as low as we could. And instead of measuring productivity and hoping that would prove to make us profitable, we measured how profitable we were, how much work was going out the door every day.
You measured the thing that you actually cared about. This is why
Yeah,
that book is called The Goal. I mean, what I hear you describing is the goal was to maximize throughput in the form of um, profit for the business. So
yeah,
instead of having in coaching, agile coaching, we talk about outputs versus outcomes, right? This
mm-hmm.
strikes me as one of those. Like the measuring productivity is an output, but
Yeah,
it's a best a proxy and probably an unhelpful proxy because I mean you can deliver 50 story points, but if it doesn't work, nobody cares. you're not
yeah,
you're not selling
yeah,
story points, you're selling working software. So measure the
yes.
working software.
And until someone's prepared to pay you for that working software, it has no value to the company.
Yeah, totally.
So in this model, the cost of the labor that produces the value is, you're presuming that's a constant. It seems like that's an unchanging value.
In the short term, yes.
Okay.
And we're talking about prioritization decisions are really, short-term decisions. Yes, you might hire some more people in a few months' time. You might fire a few people, but let's for the short term, let's just look at that as a daily cost or a weekly cost.
So it seems like this can produce a happier environment, because you're focusing on achieving these outcomes. You're making the profit, the value is going up. You can play with the one constraint that is affecting the outcome or bottleneck for that.
Yeah.
Is there ever a push from the old guard to jump in and say, well, we're going to, like, to use your operating theater example, they look at the porters standing around in the midst of that and say, operating cost doesn't have to be a constant. We can reduce that constant just by getting rid of these people. And then they created a different bottleneck. The porters became the
Yes.
bottleneck, not the operating
Exactly.
theater. Right. So they and they could play with that, and they say, okay, well, we tried that. Let's undo that. there's probably a safer way to do that than actually firing the people. Like, we're going to give you the opportunity to actually stand around and do nothing, and we're going to see if we change any of the other behaviors.
See if it works. And I think that's another of the major differences between traditional cost accounting and throughput accounting is cost accounting is trying to make you more profit or trying to increase the profit gap by reducing costs. Whereas throughput accounting is saying, well, there's a limit to how far you can reduce costs before you start cutting into the flesh. However, the sky is the limit for throughput. We can keep producing as much as the market will bear. And when we reach that limit, we'll go and find a new market.
Yeah, so cost accounting is based on a more of a naive or a simpler model of what's happening here. It doesn't take into account the fact that you could dynamically change what you do or how you do it if you are taking your guiding principle from the outcome of the system as opposed to just what the cost is.
Yeah, I mean, cost accounting, it can still be a very sophisticated, and especially you get into things like activity-based costing. And that's one of those things that says, well, in the long term, everything's a variable cost because eventually we'll need to hire more people, we'll need bigger premises. So let's build that into our cost now. But we're talking about short-term management decisions here, and it's just not appropriate. It's trying to use a hammer when you've got a screw that you're trying to screw in. It's just the wrong tool.
Yeah, we've seen people try to do that. I wonder, before we get into the nuts and bolts of how to apply throughput accounting at the team level, how to do these calculations, the teams you've seen use it, I wonder if we should talk at all about how the theory of constraints is different for knowledge work, because we talked about how, if I've got a factory, right? If my business is building ships, right?
Yeah.
If I've hired a bunch of people to build ships and I look out at the factory and their bodies aren't moving, that's a pretty good indication that they're not creating value, would you say? Because in order to create the ship, you have to move.
Yeah, we'd like to see lots of blue welding light going on, and yeah.
You're not creating value if that's not happening. But with knowledge work, like, you could have the person creating the most value you've ever seen, and she's just not doing anything. She's staring up through the window. You can't tell, right? Because
She's thinking.
She's thinking. She's creating value with her mind. So another reason why the cost accounting doesn't make sense in that case. You can't. I don't know how you'd say it, but it's harder to see the inventory in a knowledge work system and see where the waste is. Or maybe
yes. I mean, even though we didn't measure productivity in the accounting firm, we still had to run timesheets just so we could see, we knew that a certain client would pay, I don't know, $3,000 for a set of accounts. And so we just still needed to keep an eye on how much time it was taking to make sure that we were making a reasonable return. If it was running over, why? Could we charge the client extra? Was it a fault in our system? Had we missed something we shouldn't? Was there a better way of doing it? So from that point of view, you still need to record time. And I think in a factory situation, it's easy to see the work in progress building up. In a knowledge industry, and whether it's a legal firm or an accounting firm or software, you can still build up an awful lot of work in process, work in progress. I'm not sure which terminology you use, but it's hidden away somewhere. It's building up. And that's what you need to get a handle on and avoid. Work in progress, that's another major difference. For financial accounting, work in progress is seen as an asset.
It's like half a car that's been almost built, but it's still worth
half
something.
a car. Or if you had a software
or
project,
a half-baked idea.
Yes. Less valuable, maybe, but
Yeah, a
hard to
little
say.
bit harder perhaps to put on the balance sheet, Mike. But if you've got a software project and you're 99% of the work is done in one financial year, and you finish it and get paid for it in the next financial year, if you have all the cost in financial year one and all the income in financial year two, it's going to screw with your profit and loss. It's going to distort things. So work in progress is a way of carrying it forward so you can match the income with the expense. So that makes perfect sense.
Interesting.
From a return on investment and ROI point of view, you want your work in progress as low as possible because that's on the bottom line, and the bigger that is, the lower your return's going to be. So that's from a sort of a monetary investment point of view, but from a flow through the factory or a flow through the accounting firm or the knowledge the software producers, you want that work in progress inventory to be as low as possible so that people aren't job switching the whole time. And if you've got a typical sort of software company where you've got business analysts at one end and then developers and then testers, your developers probably should be the bottleneck. And so the temptation is, well, let's hire more developers. But then what happens is the developers finish a bit of code, there's a backlog in testing, so the developers go and look for something else to do, and the analysts haven't done their analysis properly, but they make a start anyway. So there's all this rework, and all of a sudden you've got more work in progress than you need. You've got developers switching backwards and forwards between jobs. You've got overloaded testers and overloaded business analysts. Really, you should have your spare capacity at the analyst side so that they are getting the work ready, all the prerequisites covered, absolutely ready to go. The developers can hit it quickly, small batches, so it can get tested quickly, and they're getting very, very rapid feedback on things. And if that means you've got testers and analysts sitting around twiddling their thumbs a bit, as long as the developers are going flat out, you're going to get your code done as quickly as possible and out to the customer and money in the bank.
Yeah, the idle time for the analysts and the testers is just sort of a cost of doing business. It's inherent. It's unavoidable.
Yes,
Um,
yeah.
yeah.
So at
And
some point, you've got to kind of look at that system and say, this is a stable system, right? We're optimized for the constraint. We've got slack on either side of them to make sure
yeah,
that the constraint can keep going. So now we know this many developers, that many testers, that many BAs together is a unit of functionality that we can maybe build on. So
yeah.
would you then recommend replicating that ratio for any expansion you want to do, or expanding in that same
I
ratio?
that would be a really good place to start.
Okay.
It might vary depending on the type of work. I mean, I can imagine a
Yeah,
situation where it's a different ratio of how many developers to how many analysts, I'm guessing, right? So maybe it varies based on the nature of the work and how much analysis is needed before development and stuff like that.
yeah.
Yeah,
It
you
would
could run the risk.
definitely.
Yeah. Sorry, go ahead.
So I was just going to say it would definitely depend on the type of work. If it's similar, then probably the same ratios. But if it's new work and you've got no idea, you need a starting place. So what's worked in the past might be a good enough place to start.
It's just from the from a high level, though, it seems like the danger of having excess work in process. I prefer work in process because work in progress implies that we're actually moving,
Making progress.
making progress. And the whole point is that you think you are, but
Fair
you're
enough.
actually not.
Yeah.
Yeah.
And I've always liked progress better, just
Yeah.
because.
Okay.
But the real risk of excess WIP, we'll call it WIP,
But
is a lack of focus across the org,
yes,
right? It's
yes,
people are running around looking at 7 different things and doing none of them efficiently or well. essentially that's the problem. Which is that fair?
It's and the cost of task switching, especially we were talking earlier about the developer who is sitting there staring into space and actually working really hard.
Hmm.
When you're in a creative type industry, if you switch tasks, you get interrupted, you do another piece of work, you've got to get your brain, but you've got to get rid of reload the short-term memory, empty it for the previous task, reload what you're doing, and actually get your brain into the same state it was in.
Yeah.
And I'm sure, the number of times I've gone back to a set of accounts, looked at a figure, thought that can't be right, reworked it, and it was right. And you've probably done the same with code, gone back and thought, what the hell's that? Oh no, it was right. But because you've been interrupted, and I read a study where it takes an average of 23 minutes or something to get your head back in that space. You know, if you just wander off and have a cup of coffee and come back to it, you don't you've still got that short-term memory loaded with all that stuff. But if you have to fill that short-term memory with something else, the downtime, the cost of task switching, huge.
Yeah. Yeah, we use that example all the time when we're explaining things to teams. We want them to not be multitasking. We want them to swarm around solutions. We want them to work as efficiently as they can. And we'll throw this word out here and say, it's said in accounting that it's a 20% hit for every time you have to task switch. And I was just and so we rattle that off like that's a fact. But I was wondering, from your expert accounting, is there a number? Is it 23 minutes, or is there a percentage that you can actually use, or does nobody discuss that?
The 23 minutes was something, I think I Googled it and it came up with that from a study. I just know that when we got our work in progress right down to a minimum, the stress levels in the office just went down. And it meant that if one of my staff was working on a set of accounts, they would have a queue of things ready to go. But if a client walked in the door and said, look, I need this urgently for the bank, it could go straight to the front of the queue. But if you've got 7 sets of accounts on the go and 2 of those people have just got back to you with the missing information, and then someone walks in the door, but you're partway through, wanting urgent stuff done, and you're partway through something, then the stress of having to manage all that is overwhelming.
Mm-hmm.
Whereas if you're working on one thing and it doesn't really matter what goes next into the queue, it just simplifies life.
Yeah, there's a book. It was written by a person. I think his first name is Mikhail and his last name starts with a C. It's a long name. I couldn't pronounce it. But the name of the book, I believe, is Flow.
Yes, Mikhail Csikszentmihalyi.
That sounds right. Yes. Yes.
Yeah.
And I've also heard of this as talking about deep work. There's a person named Cal something. I should have looked this up. But
Yeah.
it's becoming more and more important to be able to get into these states of flow and stay there.
Yes.
Especially, it goes upstream against the distractions of all the ways that we can leak attention and, our smartphones and everything's sped up, everything's smaller and more frequent in terms of how we communicate, but it works against the idea that you're going to just get into the state and stay there. So, but it's where the value is created, I guess is what I'm hearing.
And I think that's why so many knowledge workers love working from home. They can get in that state of flow, and 2-3 hours goes past and they haven't even noticed, but they've been incredibly productive, and they can't do that when they're back in the office. And yet the advantage of being in the office is if you get stuck, there's someone there you can talk to, you're bouncing ideas off, you're growing your knowledge. So it's getting the balance between those right.
Yeah, like everything in life, it's a trade-off.
Yeah.
So maybe we could talk a little bit about, so imagine you're a product owner or a service request manager or somebody who's in charge of managing what the team focuses on. In Scrum, the product owner is responsible for maximizing the value of whatever the work of whatever the team delivers, and they typically do that by defining the work and prioritizing the work and clarifying the work and saying no, essentially, in the same sort of spirit. But if you're the person who was in that position and looking to maybe start using some throughput accounting to justify or to improve the value of what the team delivers, let's say in a 2-week increment, are there specific tools or techniques that you might recommend, or how would you start them thinking about that? Are there calculations you might take them through, or what would you do?
Yeah. So if you're talking about something like prioritizing, then because again, throughput accounting, we're looking at the rate at which you earn money. So, if you tell me that you earn $10,000 a year, I'm not going to be very impressed. $10,000 a week, I'm starting to get interested. $10,000 a day, tell me more. $10,000 an hour, I am absolutely on the edge of my seat wanting to find out how you do it. So if you're looking at a couple of different, I'm not sure, products or features, and you're trying to decide which one you need to prioritize, then you need two numbers. You need the value, the dollars that it will bring to you, and how much time it will take in your constraint, possibly, to develop. And one of the problems we've got straight away is often you have no idea what a feature's worth.
Right.
So it's how on earth do you come up with a figure? So if I go back to my throughput, operating expenses, investment, those would be the places I would start. So will this feature allow us to increase our sales? Will it allow us to save cost, or will it allow us to decrease our investment somehow?
I see. So more money, less cost, or less capital required.
Less investment. So there's that's the first thing. Then looking at the flip side of that, if it's sorry, it's just started to rain here. It might be getting a bit noisy. I'll just close that window.
No worries.
If the flip side is, will it stop us losing income? If I do this feature, will it stop our major client leaving? Or if we get this feature going, will it mean that we don't have to hire someone new? So it stops a future increase of expense. And likewise, will it stop a future increase of investment?
Okay.
And you might find that the same feature ticks 2 or 3 of those boxes. Then it's a matter of trying to quantify it. And this is where it gets really tricky. We've got this new feature. It might allow us to get 1,000 new customers a month, but it might only be 200. We might get them to pay $15 extra a month, or they might pay $50 extra a month. So we can come up with ranges, and that's good enough at this stage. If you do the same with your other feature, if there's a clear winner, then that's easy. If there's not a clear winner, then it probably doesn't matter too much. And I think this is the thing, when we're talking numbers, we quite often look for precision where there is no precision or there's no need for precision. We don't necessarily want the perfect prioritization method. What we want is a method that is significantly better than just guessing or, as you mentioned earlier, deferring to the highest paid person's opinion.
Mm-hmm. The hippo.
There's a wonderful book. It's called How to Measure Anything by Douglas Hubbard.
Interesting.
He takes on the challenge and says anything can be measured. And one of the methods he uses is to, if you ask 5 people, how much do you think it will cost us to do this bit of software, or what should we charge the client? If 5 people give you a figure, people who know a little bit about what's involved, then there's a 93.5% chance that the real figure will be somewhere within that range of those 5. And where the
So there's
93,
sorry,
sorry,
go ahead.
I was going to say, where the 93.5% comes from, it's the same as tossing 5 heads in a row or 5 tails in a row. The chances that all 5 of those guesses are going to be above, or all 5 guesses are going to be below the actual, is only 6.5%. There's a 93% chance, 94% chance that within that range is where it will be.
So
Does
the value
that
of
make
talking
sense?
to the next makes total sense, and it suggests that you can do a lot. You can get as much guidance as you need with a relatively small effort or time.
Yeah.
The value of talking to the person number 6 is basically almost nil, I would guess.
It will get you a tiny bit closer. But what we're looking for is something that's good enough to make a better decision than you would have. And the same with the time estimate. How much will it be? What's our best, if it goes really, really well, what's a good guess? If we've got an 80% chance of getting it within this time, what will this be? And then you've got a range of values that you can divide by a range of time and figure out which is the fastest throughput through your constraint.
Yeah, it's interesting. We're familiar, I think, broadly speaking, in the circles I've been in, we're familiar with this concept when estimating effort on teams, right?
Yeah.
My recommendation, the way I think about it is the less time spent estimating, the better,
Yeah.
right? And in fact, probably no estimation is best. Like just break everything down to the smallest and just count how many things you do in a given iteration, and just use flow metrics. So we're familiar with this in one area, but when it comes to dollars and applying it to prioritization discussions and go no go decisions, it seems we still have some work to do in software, at least.
I think, as an accountant, my training is in numbers. And if you're not looking at numbers, you're just guessing.
Yeah.
And those numbers don't have to be exact, but just something. Anything is better than nothing. And you might then end up with 3 or 4 or 5 different things you're prioritizing. There may be a couple of clear winners, or a couple that are so close you might as well toss a coin. There might be a couple that would come next, and there might be one that you're wondering why on earth it's even there at all. Once you've got those numbers, you still might it might be a political decision to get number 5 there because it happens to be a really good customer. They're never going to leave, but it's worth it.
Don't.
Oh, sorry, I just lost internet for a second.
No
No
worries.
worries.
So, sorry about that. Yeah, what I was halfway through saying is that start with the numbers, but you've still got to run it through a common sense check, that sort of thing. It might be that one of your lower priorities is a key part of a bigger system. So, the numbers aren't the be all and end all.
Yeah, it's funny when I've been in situations talking about estimation, as soon as I bring in numbers, people immediately get nervous and they want to be super precise, and they argue over whether it's a 5 or a 3 or something, and probably want to put a decimal in there, and it's just a constant battle to say, look, I know it's a number, but also there's a wash factor, and that's a thing that people tend to struggle with. Anyway.
Yeah. And, plus or minus 10, 20%, it doesn't matter at this stage.
Yeah. Jeff, I think you had a question.
Yeah. So, Graham, in our capitalistic society, at least, our focus is on generally cost accounting. I mean, reporting to shareholders is based on cost accounting.
Yeah.
What we teach in business schools is cost accounting.
Yeah.
And so I guess it's two questions. Number one, is throughput accounting an either or is it a both? Practically speaking. And I guess the second question would be if it's either or migrating towards that, towards throughput accounting and away from cost accounting. How do you get there? And your experience as an accountant, I think, is going to be super valuable, because generally the people that we have to convince to adopt a throughput accounting approach, um, are the financial folks. So
Jeff's question is whether it was an either or for the for throughput accounting. The problem is most organisations have to do their financial reporting for tax purposes. They have to follow the generally accepted accounting practice. You're not going to change that. Their management accounting, they're possibly doing things like budgeting and other traditional forms. And I think this idea of budgeting 12 months out in an agile environment is absolutely ludicrous. I did a Masters of Commerce a couple of years ago looking at budgeting in large organisations, and the waste that process causes is just unbelievable. Right, so I'm not sure how much of that came through, but yeah, the waste of the traditional budgeting system is just unbelievable. So I think throughput accounting can run alongside normal accounting. The one of the biggest differences is just making sure that, cost accounting is trying to take what are fixed costs or semi-variable costs and push them up above the gross profit line. What throughput accounting says, if it's not a raw material, then it sits below that line. And so that's very easy to map from an accounting point of view. And then it's really the calculations you're doing around how much value something will give and how many days it will take to put it through the constraint. That doesn't need to go anywhere near the financial accounting system.
gotcha.
Fantastic. Well, Graham, we're coming up on time here, and the network is starting to fall over. So I think we're probably going to end it here. Thank you so much for joining. This was super helpful to me personally, super interesting. It's great to meet you, and maybe hopefully we can talk again in the future, because there's more to say on this, I'm sure. I just don't know what at this point.
Follow-up conversation would be great. Great
Yeah.
talking to you, Graham.
Yeah, no, it's been a pleasure. Thank you for the invitation, and it's a shame that we had those internet disturbances.
Yeah, tech is what it is. Okay, thank you so much, and we'll see everybody next time.
And that's the end of this Agile thing.